Hey, all right, so we do have a recording. Welcome, everybody. It's kind of, we wait 4 years for the Olympics, and, we schedule these events, as we try to get into our calendar, and I'm glad I'm doing it tonight during ping pong. But I don't know if you guys caught a little of the ping pong. These guys, I mean, unbelievable. And beach volleyball. I don't know if you've ever played beach volleyball. Looks easy, not so easy. That dinging was a Tradestation ding. Sorry about that, guys. All right, so we are starting. We're going to get through the disclosures here real quick. If you can all take a minute to read that through, the disclosures and disclaimers, which is good for everyone to know that trading does come with risks. It's not a risk-free business. In any event, I have a lot of really nice things planned for tonight, and some I think some good educational content that many of you may or may not have seen me before. I'm not sure. This was a concerted effort by several different parties to ask me to give a presentation. What I will be delivering are, as you can see here, a lot of the books. I'd have to just tell you, I'm going to get this little tool right here, this little handwriting tool. It's dangerous because someone called me the John Madden of markup. Candlestick and pivot point trading triggers. It's in the process of being worked on. It's the second edition. This came out over a decade ago. Introduced statistical backtest studies about the relevance of dojis and shooting stars and hammers. It also introduced the world to the person's pivots, the last conditional change, a person's pivot indicator, the PPS. Some of you, if you have Thinkorswim, you probably have, you do have access to both the PPS, buy-sell indicator, or bullish-bearish momentum, as well as the person's pivots tool. So as soon as I get it done writing, we will get that to you. Thank you very much, Taz. This book was actually, which I can't believe it's already been out for almost, believe it or not, I started writing that in 2011. That's 5 years. Where did a half a decade go, gang? It's incredible how time is flying, one data decay at a time, right? Option traders, you know what I was referring to. Mastering the Stock Market. This is an awesome book, and this is, I think, we really have been using a couple indicators. One I'm going to share with you tonight, and I think I've used this volume indicator about 3 decades, believe it or not. It was in the mid-'80s we started to use on-balance volume in analyzing bonds versus the trending volume on the histogram. And what's also interesting is that when I did a presentation to a professional group, I believe it was IFTA, the International Federation of Technical Analysis Society, and I wrote a paper on it. Many of you may know I've done things with Tradestation and, blah, 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 been all over the world. Talked at various trade shows, which I know a bunch of you guys in the room tonight have seen me at the Traders Expos. We really helped to repopularize the indicator called on-balance volume, and I think a lot of people actually started to use that and take note of that. I know Thinkorswim developed a scan there, a scan that's already built in. Cindy was one that took notes at a presentation that I did many years ago out in, I think, was that the Options Elk group out there, Jerome, in Santa Clara, California. It's been a long time. So anyway, that book, Mastering the Stock Market, had a lot of the techniques that we're going to share with you tonight. The high close and low close doji scans, this is just a gift that keeps on giving. It's so powerful. In fact, I'll just introduce you real quickly to this particular platform. Some of you are familiar with Tradestation, and this is Tradestation, and it is so powerful. We actually have scans that we look for weekly high close dojis, weekly low close dojis, and then we have different scans regarding the high and the low close doji, as you can see on my board right in here. So this helps me pick out a lot of really nice stuff. If you've been to my Twitter account, and I mean, don't get mad at me. Some people don't like Twitter. Some people don't like tweets. I'm just going to bring this into focus. I'm not saying it's good or bad or indifferent. I like it. I've used it to send messages. And the messages that I send are actually more trading messages. So in fact, this is one that I sent out on Friday, I think it was, or Thursday, excuse me. And I sent this Thursday, just minutes before the close. And I said, if it closed above that, it targets 38 in 10 days. And someone had bought it. What I was saying is someone bought 1,000 of the August 38 calls on PayPal. Well, PayPal closed right above that level. The next day it gapped up. And pretty useful information considering the fact that PayPal was giving us and I'm just going to share this with you right fast. PayPal was generating this specific buy signal. So it's a very valid, and if you can learn that if the signal really was something I discovered well over 15 years ago now. We put it in that book, Candlestick and Pivot Point Trading Triggers, and it was something that was revolutionary, especially when combined with looking at different volume indicators. Anyway, this is a very powerful kind of a tool. It gives me an entry where my stop should go, and based on a specific measurement, we look for a particular profit target. Now, what was interesting is I saw that this was a high close doji. I went to go look at the options for myself, and lo and behold, I noticed that someone just bought 1,000 of these options that were priced at 30 cents. Now, no one in their right mind really goes out and buys 1,000 options of something that's going to expire in 2 weeks unless they really, not on a bullish signal, not unless they really know something was going on. And of course, the next day the market gapped up, and you know, those options more than doubled by the end of the day, which is what we continued to tweet out. I'll share with you. This I find, and as you can say, by the way, PayPal, it's up 46 off the buy signal we tweeted, which means scale out if you took the trade. And then bang, PayPal came within 7 cents of the profit target. Get out of them. So anyway, those were some of the things that I do put out on Twitter. And many of the trades that we've put out, by the way, I didn't do this. This was I retweeted this. This was on, I don't put out a lot of, I don't put any political comments one way or another. I don't even talk politics with my family. It's not good. But I did like this. This looked like Hillary during the Democratic National Convention. I know I saw that suit before. I thought it was funny. Take no offense to it. I just thought it was funny. And that happens to be someone who's a producer at CNBC. Anyway, you'll see that we don't send anything that's offensive. It's not opinionated. It's either got something to do with trading, and that's about the bottom line. So if you're interested, we've developed a following of around 70,000+ people. Because I think I do keep it clean, I do keep it concise, and it's business related. All right. Every once in a blue moon, I send something cute. I'm not offensive about it. So I know there's ifs, ands, and buts, and all kinds of reasons why people don't like Twitter. But I can tell you, with the spam police, with servers to get out of communication, sometimes by email, it's just real fast and simple by Twitter. So this world's become a little bit more complicated. Technology has not made some of our lives easier, and I'm sure many of you can probably relate to that. So in any event, the books that I've put out have been instrumental. We did this book called the Commodity Traders Almanac for about 8 years. It was shelved. This was the last year we did it in 2013. This book was, I think the title, Commodity scared people, and even though I started off in the Chicago markets back in well, too long ago, but this book was fabulous in the sense that since I was trading more equity and equity-based ETFs, and that related to the seasonality of commodities, we were looking at like John Deere and corn, and looking at that synergy of that seasonality, and looking at gold miners to the price of gold, and looking at energy stocks as it related to crude oil prices, and that seasonality, as a lot of those products obviously trade in tandem with those markets. So trading seasonality has been a part of my lifestyle for several decades. at least when I first started, and I will tell you, I first started to work for a guy by the name of George Lane. Many of you probably use his indicator. It's called Stochastics. I worked with George for about 2 years, elbow to elbow, literally, sat down at a table watching him. I helped him at one point write his newsletters, get out information, help with the data and the research when I was a kid. And George used to love watching and trading, soybeans and live cattle, because back in 1980, 82, remember, back in those days, the S&Ps, we didn't even have S&Ps yet. So the big markets was gold, it was lumber, believe it or not, potatoes was a big market back in the day. So not to give you a quick history lesson of what products, but what I did learn from George was that, and I still use this technique to this day, is we utilized a 15-minute time frame for the dominant trend for day trading and traded against 5-minute signals. So I used to watch George use that 5-15-minute combination, and I wanted to share with you just on my charts that you could see, like on my day trade page. Well, in ES, I use several different combinations, 1, 3, 15. This should be 5. It obviously got mixed around because I do things like that. And the indicators that I utilize day in and day out, especially for day trading, I use my PPS indicators. These are these buy and sell signals that you see. I utilize these signals in conjunction with the person's pivots, which identify whether a market condition is up, bullish, or bearish. And if it's bullish, it'll target a higher high and a higher low. I also have a little bit of private proprietary momentum indicator. And then I use, as many of you are going to find out tonight, how I integrated and used the on-balance volume indicator, which was very powerful, especially for, believe it or not, day traders. It's really important that nowadays, and I'm going to give you a little history of why I think Joe Granville's indicator is so powerful now, as it started to become more and more helpful since about 2008. So by the time I started really sharing that information with the world and teaching at trade shows and doing these things on Tradestation's morning briefing, it's really caught on popularity. More and more educators, more and more people are starting to use the on-balance volume. And I think it's important that you start to maybe apply it in your own trading, because right now, as I'll share with you, if a trend has got merits, we're going to start to see the accumulation of positions. And again, we're going to see an increase in volume in the market. When we look at, like, for example, insert an analysis technique. Oh, I did not want to do this kind of thing and lock stuff up, but I always like to give real-time examples and real-time stuff. So let's take a look at the histogram. This is the E-mini S&P, and so here's volume. I mean, quite frankly, I don't know what you guys, this volume was kind of down, the volume was down, the economy was up, it was kind of neutral, it was kind of down, it was kind of down, neutral, down, down, kind of down, kind of down. And then if you look at the overall trend of the market, what do you see? This is lower, this is lower, this is lower, and that's lower, right? Meanwhile, what you see is the what? You see the trend going the opposite way of the actual volume, right? Does everyone see that? So why is that? What makes that happen? Well, first and foremost, I think what happens is that people look at the volume of a market and they go, oh, it's declining, the market can't go any higher, and then they sell short, and then bang, it just rips their head off. You get a buy signal in the market, and they look at that volume, they go, well, the volume's going down, it's not going up, and then next thing you know, or they look at buying the market because it's bullish now, right? And it's like, well, it's on light volume, it can't go down. Well, there's a couple little things that we're going to share with you tonight, the nuances of how and why we use those indicators. So tonight I want to get a little into my candle patterns that I have been using, my proprietary high and low close doji. They're easy to scan, as I've just shared with you. We have scans on them. I want to look at this volume analysis and indicators and give you the real reasons behind why I think it's been working more efficiently in this new millennium market environment rather than any other time in the past. All right, and I'll cut to the chase. The real simple reason is between dark pools and the increase of popularity in options. That's one of the two of the big reasons why we see the on-balance volume a more efficient tool than individual volume bars, okay? And then I'm going to touch a little bit on it tonight because I know a lot of you guys, ladies and gentlemen in the audience tonight, are stock traders, and I can't teach my top 12 indicators that I kind of look at, and I'll just run through them with you. I mean, they're not my indicators, but this is kind of like the checklist of things that I look at. First and foremost, I obviously look at my buy and sell triggers because they're easy to scan. I rely on my high and low closed dojis because it's actually a trading system. It gives me entry, stop, gives me profit objective, and time duration to be in the trade. Now, that is how I can help traders increase their efficiency, avoiding hassles, and more importantly, cut costs by reducing risk. And if you're an option trader and you have a better, faster buy signal, more reliable meaning better, a more reliable buy signal meaning it works more times than not, right? Then you trust that indicator, number one. And if you're an option writer, well, if you have more time and you get in on a signal before the rest of the world, guess what? You're selling premium at a better price, and if you get in at an earlier price, you're actually reducing risk because you're not chasing markets. So my indicators and what I teach has actually helped clients and traders, again, increase their efficiency, avoid the hassles of having where to place stops, and in addition, help them better price and increase their pricing models, which also, at the long run, helps you with your position sizes. So besides that, we use Person's Pivots and that indicator tool. I mean, we all should be looking at the traditional patterns. No one doesn't go without looking at consolidation patterns like wedges and, again, M top formations or W bottom patterns. I mean, those are all very efficient technical tools as well. Seasonal and cycle analysis, well, literally I wrote the book on it, so let's move on. Volume analysis, I kind of repopularized that, reintroducing that in my books. I have a proprietary momentum indicator, and then without a doubt, this one right here, guys, relative strength analysis, and that's just pairs trading, comparing one product to another. So just to share with you what's at stake when we want to really get the devil in the detail. So if I want to take a look and say, what's the best performing stock sector of the market, right? I would look at this graphical picture, which gives me exactly from the starting point of the ground zero, so to speak, of the beginning of the year. It tells me where are specific markets, what's their performance on a year-to-date basis. This is the XLF, which is year-to-date, the XLF finally is up 2.9%. This should be the utility sector, and I'm pretty sure XLU. XLU was the best performing sector, and as you notice, it's falling off the highs. Why would I ever look at a comparative analysis of looking at percent changes of a market? Well, they're all priced differently, and they're going to have different price gains or price losses year to date. So we want to look at it in terms of percentage changes. And I can take a look at knowing what has an effect on the market, like is utilities leading, or are we starting to see a breakout in the XOP again? Is healthcare moving? What sectors are lagging? What sectors are leading? And that'll help me to determine another thing like relative performance that we've created. Is now the time to, for example, it's now the time to be buying Alibaba. The volume looks pretty good. The relative performance compared to the S&P 500 is moving up, right? It is showing a little bit of accumulation in the marketplace. It isn't a buy signal. And guess what? We've got resistance about $4 higher from here. So, I mean, Alibaba is showing relative to the S&Ps, it's outperforming the market. That's where I would get and take advantage of relative strength analysis. Let's take a quick gander at XOP. Well, XOP just came on the scene. A lot of people kind of trying to figure out what to do with energy. The XOP actually started to outperform the market last week, and it really took off on a very strong accumulation of volume, right? The OBV really started to fire off, and we had 3 days of some significant follow-through. For about, believe it or not, 8% move in the XOP since this triggered off. Pretty wild. So if you take a gander, here's a little company called Hess. Many of you might be familiar with Hess. Another one that we actually jumped on last week was Valero, VLO. So bear with me a second while I introduce this to you. And this is where we get, I don't want to make sure that I get too in-depth. I just want to give you a taste, an introductory of what indicators are out there and how they're efficient and working in this environment, okay? So if we can see that all of a sudden, way back over here, you see how this thing's just turned yellow right about here, right? So actually, Valero was starting to outperform the market, and it's been doing so since about, well, let me give you the exact date rather than give you my estimated date. But we started to outperform the market on July 21st. That's when the market started to outperform the S&Ps. And as you all know, the S&Ps, they kind of went sideways, but they've gone up. And even still, Valero and the energy component sector has outperformed the market. So that relative strength was very important in identifying a low-risk trade. If I'm going to get into a trade, if I'm going to, instead of buying high, I'd like to, what? Look for buying opportunities and make sure that if there is buying opportunities, is there volume accumulation coming into the market? By the way, talking about patterns, you may find this to be appealing. If you do know or are familiar with chart patterns, this might be forming what we call an inverted head and shoulders bottom. Another thing I want to touch on tonight is this is really interesting here, is that you can see an inverted head and shoulders bottom. You can see the inverted head and shoulders bottom in the price of the individual stock, and you can see the inverted head and shoulders bottom measured in terms of the volume indicator. So what is a very good component, or at least what we like to talk about as far as technicians. And while some of you might think that this is complex, it's actually really easy to learn. It's fascinating, and this is the kind of thing that most institutional traders are looking at to find relative performance, relative strength. Remember this term, buying begets buying, money chases money. That's why you heard the terms like, the dogs, people, the dash for trash, things of that nature. Well, that's when the market's really breaking out, and then finally people go with the garbage stuff because, they've got some extra money to kind of chew on. But the real of moves was taken by stocks and sectors that were outperforming, and that's what relative strength. And I just wanted to give you some of the things that we talk about and that I look at for my trading. So one of the greatest trading methods, and I want to keep this real simple for you guys that you can follow and walk away with tonight learning. First, in summary, I just shared with you how that the on-balance volume actually had the mirrored chart pattern in the XOP of an inverted head and shoulders bottom as the pricing. I hope you walk away because that's very important information. It's important in the sense that if there is an inverted or if there is a regular head and shoulders top pattern in the market, that volume flow should show up in the indicators, and it increases the likelihood that that will be the pattern that if it does break out, that you can kind of have more confidence that the measuring objective that you would use in a inverted head and shoulders pattern is going to work for you. The market, the probabilities are on your side. So it's important that if you see a pattern in the charts, it kind of mirrors that in the indicator, especially with the OBV indicator. I hope you guys heard that. All right. So what I'm looking for, and I'm sure everyone in this room is looking for the same thing. What do we want? I want to get in the market. I want to take little heat, and I want to make as much money as possible quickly. Amen. I mean, that's pretty much it. That's what we're looking for. So I need the ability to spot a high probability trade, something that's better than 67%. And I need something that has signals with a specific entry level. Now, I might not, when I say entry level, I didn't say price. Entry level is based on condition. Is it today's close? Is it the open? When is that, where and when is that entry level? And I need that entry level based on a price and a time condition. Because remember, in charts, we have two axes on a chart, the X and the Y, time and price. And I also, when I get into a trade, I also want to know when am I wrong, because if I can limit my losses and get out quickly, then I have less pain and I can move on to more productive emotional and more productive financial trade setups down the road, right? When you get married to a loser, it just drags you out and you just, it's draining. So I want something that I can rely on. It's frequent, in other words. It happens frequently. And I want something that gives me a time horizon. So that's kind of what the system is with the high close doji. Most people don't know really that the HCD is an actual trading system. And it is a trading system in the sense that it is reliable. It has a high probability of success. It does tell me where to get out. It does tell me the expected time frame I should see the results. Many times when we get that high close doji, it's within 8 to 10 bars that I should see the results. Sometimes it's in 2 bars. Sometimes it's like the next day, like in PayPal, for example. This is just something that I have to monitor. And then I need to set initial profit targets for scale outs, because I don't know if it's going to stop at the first profit target or keep going and become the best ATM machine. And I need areas to trail stops. That's a trading system. So basically what the bullish high close doji came with a full array of rules. One of the rules is after a downtrend. And I'm just going to teach you this. After a downtrend. It doesn't mean the market rallies and then a doji forms at the high and the market closes over the high of that doji. That's not a high close doji. That just means the market's in a close above a doji high. That means nothing. To me, a high close doji setup is after a downtrend, and then when you see a doji, it's within a few bars after that time frame that the market closes above the high of the doji. Many of you have seen the 3-candle pattern, what we would call the morning star doji formation, right? And I mean, I looked for that pattern until I was like blue in the face, and I never saw the pattern. And it was kind of a similar situation. After the market went down, market had a tall red candle, right? Tall red candle, and then the market gapped lower on the open the next day, closed at where it opened, forming a doji. Next day, it opened higher, and then it closed above the midpoint of the first candle's real body. That is the exact definition of a morning doji star pattern. Quite frankly, more times than not, we never saw that pattern. What I did see was that maybe there was a doji, and the next day there might have been maybe a hammer, maybe another candle. And then 2-3 days later, finally the market closed over the high of the doji, and that would launch the market. So that's what led me to understanding the power of the trigger. And the trigger was that the market closed greater than the high of the doji. Now, in my 30-plus years of market trading, back in Chicago in the early days, in the 80s, there's 2 famous guys, a trading method called the turtle traders. Many of you are probably familiar with the turtle trading method. And we had this Richard Dennis, who was the founding father of the turtle traders. He ran a company called C&D Commodities. And their big thing with the turtle trading methodology was real simple. They looked for markets that closed above the high or the highest high of the last 4 weeks. So that would then give them a momentum bullish breakout. Their stop was something about, below the low of the lowest low of the last 10 days. That was their stop. It was huge risk. So when they were wrong, I mean, it really hurt. But back in the 80s when commodities were breaking out, I mean sugar and gold and coffee and these commodities and soybeans and, you know, when things were breaking out and moving, that was a great strategy when it worked. What's the moral of me telling you that? Real simple. It's a momentum. The momentum is based on the close. It's not sometimes important how a market opens. It's important how the market closes. So we have to watch the market on closing bases. And that's what's really important. Okay? So, I mean, we've gone through whether you're using JCPenney on a 5-minute chart. I mean, you can obviously see we color code these, and what we're looking for are changes in the momentum to help us understand maybe bullish and bearish convergences. If the momentum indicator is making higher lows and price is making lower lows after a downtrend and you get a high close doji pattern, you can look to take long positions. And that, I think, is one of the things that has really been instrumental in helping to identify markets. You know, we're going to see markets eventually go into turns, meaning we're not going to be in this bull market forever, believe me, right? But I think it's important to look for what we are going to see on the next pullback, and there will be a pullback, and I think that you're going to want to look for, you know, as we get into the end of the third quarter and into the beginning after the elections and getting into the end of the fourth quarter, and again, think of what we got to go through in the next few months, next 7 months. You know, we get your typical August, September sell-off. You're going to get your FOMC meeting, and the talk about them raising rates will be in the picture. Then you've got the elections going on, right? Then we got earnings again. Then we got Christmas coming up, right? And then you got the end-of-year tax loss. You know, people sell the losers towards Christmas, the end of the year, to take that tax loss credit. And then in January, you get the January break where people take profits on stuff that, you know, so that they can defer their capital gains. I mean, it's just a simple thing that makes the seasonal tendencies go, and we just have a little different thing this time around with a presidential election. So, with that said, we will be looking and watching for breaks in the market, and you're going through gyrations and sector rotation of the marketplace. If you're a day trader, it's a fabulous indicator to use. In fact, we actually look at day trading with that HCD, LCD indicator in the marketplace. It gives us whether it's a 5-minute, a 15, here's a low close doji, whether or not you get these signals and you take them, here's a quick, after a sideways action, a little high close doji the upside, a low close doji the downside. I mean, you get really nice little setups in this pattern. So I'm here to tell you, it works. Whether you're a stock trader, a day trader, it works. And it's a very efficient tool. So, but one doesn't go without the other, right? You need, it's like epoxy glue. You know, one compound, nothing sticks. You got to add the two chemicals together to get a more powerful bond. And that's where volume analysis using the OBV indicator has really helped. And I think, number one, it's become a more efficient tool in the last 8 years due to the increase of option trading, which does what? Dilutes. Instead of buying 1,000 shares of Apple, a trader can just buy 10 options, an ITM in the money option, and it's a synthetic, or sell a put and buy a call. He's in a synthetic long position, right? So that option volume is not going to show in the underlying stock. In E-mini S&Ps, there are about 700,000 more trades in options, and so when you look at the E-mini S&P volume, it's a little over what, 2,800,000, and you look at the E-mini option, E-mini futures with options, and you find out there's, you know, over 3.5 million. So obviously options are a part of the investment arena. Between foreign markets and American depository receipts, it seems that because of the increase in advent of exchange traded funds, even as well as inverse and inverse leveraged ETF funds, we've really helped dilute the way people trade the markets Thus, that volume analysis is being what I call or consider to be masked. So I wanted you to understand there is a rhyme or a logical reason behind why I think in this day and age we have been seeing a more efficient tool and more help out of using the trend analysis of OBV relative to histogram volume. Okay? So when I look at a market, I like to look at a couple things. I think everyone can see that the seasonality here of this particular stock, Limited Brands, goes up during that time of year. All of a sudden you get one of those PPS signals at pivot monthly support. You know, your volume is going up in a seasonally strong period of time, and guess what? The stock goes up. It's not as easy as that all the time, but it's a good component of what we like to look at, right? What is the best trades? There's a lot of, I'm going to be in Germany and giving this presentation in October, and a lot of them trade foreign currencies, and they all like Forex. And it's funny because I actually wrote about this in my book, oh boy, that was a decade ago. And I said, you know, you could trade the FXE. It's a brand new ETF in 2005. I said it's like Swiss cheese because it's really holy. It's got just holes everywhere. But I said eventually stock traders could look at the FXE. It was in chapter 1 of that book, Candlestick and Pivot Point Trading Traders. What's interesting about it, I said what you need to do, and even for Forex traders, is use the futures analysis for volume, because the Forex market and the FXE isn't thin enough and doesn't offer volume enough to analyze the trend or strength of moves. And so here is just an example looking at the Euro currency Forex market. High closed doji. It's after a nice little, what we would call considered a double bottom in the works, right? This is a W bottom pattern in the works. And there's your entry. I mean, literally, as soon as that high closed doji happened, the market launches. Now, I have a little histogram momentum indicator that points to some strength coming into the market. But look at the volume. There is no volume in Forex. It's dead. It's flatlined. But let's take a look at the same chart using the futures, the Euro currency futures. Same chart, ironically, same pattern shows up, but this time, what do you see happening? You see volume surge coming into the market. So if you take a look, this is the exact spot right in here on the OBV. It starts to break out, making what? Higher highs and higher lows, and that volume really helped to identify the strength or the power that would be coming into this move. So if it's true in the old term adage that if volume leads price, if volume leads price, if volume does lead price, then price should go higher. And it should take out older highs. So if you take out the old level of volume, so if the volume was there, and the price is there, and the volume goes here, it's going to probably give you the idea that as the market in time moves, it should go higher since the volume is starting to move in advance of price. So the volume here started to move in advance of price. And so with that said, you can anticipate that the market has strength to it. So that's really kind of nice stuff, guys. All right. So in your trading, I think it's like, don't take the indicator for granted. Oh, it looks good. There are certain things I want to look at. Does the market have that kind of W bottom? Does the indicator kind of have that double bottom? Because if the indicator shows that type of double bottom and price matches it, it kind of tells me that the two are in sync, and if one leads the other, particularly if volume is leading the move, then it's going to tell me that this thing's going to launch to the upside. How many of you would like to hang on to your winners just a tad longer? I know I do. I would, right? I mean, I've been doing this style of trading where I get out, I scale out at 50%. I don't pyramid. I don't Powerball where I add on and add on and add on. This is not that type of investment environment for that. Typically in the last 18 months, all we've been seeing is 5, 10, 20% moves in stocks, and then market pukes. It's done. It's over. So I've been just scaling out and letting stuff ride. That's been the style that's been working best for me in this environment. When it comes to looking at the tool, I feel sorry for the people that really don't get extensive training in this, because when I look at this volume analysis, I don't really, to be honest with you guys, I don't know what anyone sees in that. I mean, it's kind of hard. I mean, I don't see a volume trend. I guess it's a little up. I think I can see the volume down. I mean, these 2 days were big, but I don't see any pattern there. But I can definitely see a higher high and a higher low pattern within the indicator itself. And that's some of the advanced teachings that we like to give people to make their job a lot easier. So let me ask you, was that that wasn't that complicated, right? It wasn't that complicated. All right. Relative strength, maybe that was a little complicated. Might have been a little over people's head. But I guarantee you, if you can say relative strength, then you can learn what it's used for. It's not that complicated. In fact, it's probably something, if you don't know what it is and you think it's complicated, it's probably something you better learn. That's how I see it. I mean, you know the old adage, if you want to play tennis and you want to get good, play with someone that's better than you. Don't try to play with these ping pong players in the Olympics. These guys are ridiculously sickly good. I mean, I have never seen anyone hit a ping pong ball like that except for in the Olympics. But the moral of the story is, if you want to play a game better, learn better techniques, and learn the techniques that are working, that make logical sense. Now, what I like to look for is something we call an X factor, and I have a little series of different moving averages that I use to help me smooth out the OBV trend, and I like to call this the X factor. When I look for a market that gives me a buy signal, a real simple rule of thumb, and I do this each and every day in our trading room. If I like to see the markets on buy signals either near support or breakout above the pivot. And if we get a breakout above pivot, it tells me that the market has a good shot of rising. Where to? Potentially pivot resistance. This is a classic example of the person's pivot indicator, where the pivot point is above the moving average, which is the gold. When blue is above gold, it means the short term is above the longer term, and that gives us a bullish environment. So we're looking for buy signals, and we're looking for accumulation of volume. And what would be a better determination of an accumulation of volume? If the OBV is above a moving average. And if that's the case, then I know that the market's triggering accumulation of volume, and then I can look at the market as from the long side. This is just a simple 5-minute example on the Russell futures, okay? Now, when you compare that by looking at, I guess this was starting to move up, but this is more dramatic than this. And then as the market really starts to peak, people are probably saying, hey man, I got to get long this thing. And then it starts to lose steam, and maybe people are thinking, I got to get out of this thing. I don't know what people are thinking, but I can tell you this is not as helpful as this. And that is on a day in and a day out basis. So even Apple short-term trading, this is a different stock, different day, different product, same theory. Even looking at buy signals with the X factor above on a bullish day, blue above gold, I like to look for buy signals. And for swing traders, by the way, this is a day trade, a 5-minute, using person's daily pivots. A swing trader might, example, use daily charts with weekly pivots. So daily candles with a weekly combination. On day trading, you'd use an intraday time period like a 5 minutes with the daily. So intraday charts go with daily pivots. Daily charts can be used with weekly pivots using this very simple approach. Take buy signals above the pivot, and when you get that little buy signal and you get that X factor set up, it's very efficient. Again, I'm not sure as the volume is going down, the OBV is going up. I mean, how many people would probably have thought, the stock can't go anywhere, it can't go up, it's on weak volume? And I'm here to tell you, a lot of people think that way. And as you can see with the on-balance volume, maybe you get a little reprieve and you get the X factors in here, but I don't know what the heck this thing teaches you. Really, it's been more hurtful. And to be honest with you, I think it should be outlawed in this environment. But at the end of the day, we still need, it's a kind of a zero-sum game. For every winner, there is a loser, right? So these are kind of the things that I like to just go over with you guys and look at different examples of why and how, whether it's Abercrombie and Fitch, which ANF and American Eagle had recent spectacular moves in the last week or so. We'll bring that up to you. Actually, let's go to the breakout page if I could. I'll get this one here, and I'll just go AEO, American Eagle Outfitters. AEO on a weekly basis, outperforming, been in a weekly buy signal. It's just been on a rampant tear. And this is live. This is not a PowerPoint. This is just stuff that we were actually looking at and recommendations that we've made. Look at the example here from a buy signal that took place and the OBV and how it's trended and made a smooth aggression to the upside. I mean, that's kind of and even look at this is the daily chart to your right, and this is a weekly chart to your left. Look at the power of that weekly breakout. So if you think about it, this is where the volume was over here when price was there. Market, the volume started to break out above those highs somewhere over here. It kind of gives you the inclination that if the volume continues to break out to newer highs, price just might break out to newer highs. And if you had that over here, in that insight over here, I mean, that actually was a nice little move that's been taking place over the last week and a half, right? So that's just little, and I hope that kind of shores up what I've just been pointing out to you, that sometimes the volume does precede price. So combined, when I run scans and I'm looking for high closed dojis, this is kind of interesting. Here's a McDonald's. This was last year, but it was a fabulous trade because it was in and out the same day. We ran a scan, we were looking for the market, and we came up with the high closed doji, and we made it real simple. I think what it was is that we said at the time to like buy the, I think it was like the May or the June 100 strike calls, because we wanted to take a little bit more data on the trade, be directional, and this big old kind of wedge pattern. And I had no idea that the market would rally literally nearly $5 in one day. But that was something that we covered. This is a real trade we had performed. And then noticing that the market was already starting its little ascent, look at the on-balance volume direction. Look at the on-balance volume direction on the weekly chart. So there was two time frames, daily and weekly, that were showing true accumulation in the trend of the market. Price was moving up, volume's moving up, price is moving up, volume moving up. So this was something that not only can we run those scans, and I think I just shared that with you, that here's the scanner, same equipment, same thing. We just look for those types of buy signals when we're in the marketplace. We'll just run the scan and say, hey, find me a daily, we kind of got some really neat little additions here, like how about a stock? Check this out. So let's say we have a stock that's in a weekly buy mode, right? It's in a weekly buy mode but pulls back several days or several weeks. Wouldn't you like to have an indicator that can tell you, hey, by the way, we got a daily buy when the stock's in a weekly buy? It means that the market is in a longer term buy signal and it's pulled back, and now the shorter term is generating a new fresh buy signal in the direction of the longer term trend. That's what this is. It's a continuation pattern scan, right? And that's kind of what we look for. Now I can just take a look and say, well, what's the heaviest concentration of names on the board? And then take a look at, I don't know, pixel work. We all know pixel work, and say, do I really like that trade to put my money to work for tomorrow? And I can just go on through the list and say, gee, what stocks, this one's going to form a weekly buy, whoever this is, Trans World Entertainment. And I have at my power some of the most proficient market analytics at a press of a finger. And that's what we've created with this stuff. It's pretty wild. This was, ironically, that same day. This is really ridiculous. Talk about how markets interact. This gives me goosebumps to even share this with you because it happens a lot, folks. We had a daily high close doji, and at the very beginning of the day, this is the same day that the market ran up from 95 to almost 100. It had an intraday, right out of the get-go, a 5-minute buy signal, an HCD, a 5-minute high close doji buy signal. The momentum was up, and look at the short-term volume. I mean, what's really crazy is that the OBV was sharply trending higher, and look at the little volume bars here. They're barely budging. No one would have really paid any attention. And then as the on-balance volume started to peter out a little bit, and the market started to peter out, guess what? That's when the volume really kicked into high gear. So volume traders would have started to identify buying this here at around maybe 98, 97 and a half. And you guys, you're going to start to learn to get in this stuff at around 95, right? I mean, the difference between 95 and 98 is a difference of, maybe getting in and getting out the same at that price. There's a couple other little things on this chart that are marked up. I didn't put these little white lines. These are my last conditional change. The last conditional change is a stop method. It's also a key reversal indicator. It helps us to identify if the market's trending up, then guess what? The market shouldn't break one of these lines. And what happened is the market finally broke one of those lines right there. The OBV was already breaking down. And there's a high volume bar, how I would analyze it. But you guys would probably, if I could teach you this, say, gee, why are these green bars going down when the price is rising? Because that means that the momentum's losing speed. Why is the on-balance volume turning down? Because it's starting to get liquidated. And then these volume bars here, if you're a volume trader, you're probably looking at this going like, maybe now's the time to get in the trade. And that's not what we want to teach you guys, right? So the XOP, it's a fabulous ETF, and on the oil and gas exploration sector. And what's really neat is combining, and I hope you really get a lot out of tonight if you've never been introduced to my work, because, it's not like I got one indicator that fits best. I use multiple non-correlated indicators. Seasonality has nothing to do with candlestick charts. And the candle price pattern, really the condition of the volume, is a different component. Price can go up and down with no volume. Price can go up and down with lots of volume. I want to know what the condition of that price move is. That's why I use volume. But if a market, if everybody and their brothers and sisters are bearish in the market and they think it's going down and it's going to zero, but seasonally speaking, the best time to be buying is at the end of January into February, and I end up with a high close doji, I can guarantee you we're going to be looking to go long this product, which we did. More importantly, I'm going to start looking at the component the stocks within that sector or that subsector. And I'm going to start looking at integrated stocks to see if, are they getting buy signals? Is there an accumulation of OBV? Where are we in relationship of the pivot point? Hell, we're near pivot support. We got a buy signal and the OBV is moving up. That's a no-brainer. This is a great little story here to share with you guys because this wasn't that long ago. This was in last year, January 2015. Everybody said they were short. Everybody said they had no exposure to energy. Nobody wanted to be long. Everyone said crude oil was going to $20. But by the time, I think even on the financial TV, they had, I don't know what his name, I can't remember his name, big oil tycoon guy. And he says, yeah, this oil can go to $10 a barrel. Well, I wouldn't have any exposure to oil at this point in time. Well, when he was going on CNBC talking about that, this stock rallied over 20, let me write it down, 20%. A 20% move. I don't care who you are. A 20% move is a huge move for a stock in less than 3 weeks. Big move. right? Big move. Tesoro, same thing. So for people that didn't have exposure for crude oil, the sweetest move, meaning no heat, as soon as the signal fired off with accumulation in volume, man, that is from X to Y, a pretty significant little move. Wherever you want to get off that train ride, it all offered you amazing profits. ConocoPhillips, we actually took this trade too. It wasn't as great as the others, but this was a great trade still nonetheless, and made decent coin on it. Where do we get these trades? We get these trades by running scans. And scans nowadays is something that's going to help you. Someone asked me about gold, and you know, the answer is, how does it work for gold? You know, you can take a look at all. In fact, here, let me show you something real quick. We take a look at my radar screen on Tradestation, guys. This is one of the most powerful tools, whether you have Tradestation or not. Let me tell you about Tradestation. The radar screen is probably one of the most powerful analytical tools, bar none, period, for any platform, even Bloomberg. Institutional traders, believe it or not, Bloomberg Terminal has something kind of like this, but not like this. Anything you want to set an alert on and be alerted to, it'll show you in numerical fashion. And you can just like say, this is what I want to know. Is the pivot in a bullish or bearish on a monthly or quarterly basis? Is it bullish or bearish? Are we in buy signals on a monthly basis? Are we in buy signals on a weekly basis? Are we in buy signals on a daily basis? Alert me by blinking when we're going to generate a new buy or sell signal so I can watch this on the close or right into the close. By the way, XLV today generated a little low close doji, XLV, the healthcare, because we had a bunch of stocks in the healthcare and biotech generate sell signals over the last couple of days, by the way. So how does it work for gold? The indicator works for gold. The unbalanced volume tool this year, I'll be honest with you guys, I personally have had a few good trades, but I didn't catch the low in gold. I personally didn't believe in the seasonality with gold. The on-balance volume for me, this was one of the very tricky years, and we got people that are here tonight that are in our trading room, so they know I'm not gonna sugarcoat something. I'm gonna tell you the way it is. And let me give that example here real quick with the daily charts, right? So when we got into this year, if you want to see this, and we'll clean this up real quick and then conclude it. So gold started to get this little rounding bottom. We had the first little breakout. The volume wasn't great, and it wasn't until here that the OBV really started to accelerate. So gold in late January, February, this is typically the worst time of year to buy gold. So this was kind of like it finally breaks out. It went 1, 2, 3, 4, 5, 6, 7 days. The bulk of the big move happened in about maybe, let's call it 10 days, just to round up, okay? That was the bulk of the big move in those 10 days. While we didn't have a sell signal, the volume started to finally break out, but it wasn't as strong as we normally would see, all right? So we kind of missed that move, to be honest with you. I didn't get short, so I didn't lose. I just missed an opportunity. But I think here's what the real question was, GDX. The GDX, and that's what I missed, and we learned from that lesson. And I'm here to share with you what I learned, because this is powerful. What I learned from that lesson was the GDX broke out of volume way ahead of any market. So it wasn't that people were buying gold. It was really weird. The gold miners led gold this year a little bit. And here's another little thing here. So that's the gold miners. Look at the substantial rise in the OBV relative to the gold miners. Now, let's look at one other thing, NUGT, Nugget. NUGT, Nugget is the 3-time leveraged ETF on the gold miners. And what we noticed was that we had a bigger, crisper, cleaner buy setup in the inverse, or excuse me, the leveraged ETF relative to anything else. The on-balance volume, even my own private momentum indicator and volume indicator here was unbelievable. I missed that. They got one by me, guys. I'm here to tell you. They got one. They threw a fastball. I missed it. But here's what we learned from it. It showed me that institutions and funds, these guys seeking alpha, they're not trading as much options. You guys may have noticed, if you're an options trader, have you noticed this year that bid and asks have gotten unusually wider? It's gotten a little thinner in the option arena this year. Have you guys noticed that with the options this year? And I think what it is that we've been seeing more participation in the funds in leveraged ETF because we're seeing short-term, sharper moves 2-3 days out, and they're not dealing with the options as much. So this is one of the things that I think this particular year, Taz, that's not necessarily true. Mining stocks don't always lead gold. This particular year, though, we saw a little bit more. In fact, if you take a look at Nugget, and you take a look at GLD, and you look at GLD as in terms of its move and its breakout in February. I mean, obviously GLD is the ETF on gold, right? So if you take a look at that, and then you look at GDX, the miners GDX, right? As you come back and you look into the same time period, I mean, it was just like flatlined, right? You didn't get the breakout in the miners this year. You got the breakout in gold, but it was that leveraged ETF, and that's what I'm here to share with you, right? NUGT, it wasn't just the miners, man. They were going into the leveraged ETF. And they've been doing that, and this is the lesson you guys might want to learn and watch. So look at the same relative time frame, and if you go and look at a comparison of analysis of a spread chart, you'll see that you had a more pronounced, bigger move in the leveraged ETF Nugget before you saw the miners. Very interesting, and that's what my point is trying to make to you guys, that right now it's the leveraged ETFs. We're starting to see, you know, it used to be people would go into stocks, right? So in the list of order, you know, you'd see volume in stocks. Then you'd see volume in maybe options, right? Then a couple years back, you'd start to see a little difference between some ETFs and ETFs in options. And in the last few months, it's been the leveraged ETFs, and that's what we're seeing. Like another one here is an example, and we caught on to this game early, like retail. That's a leveraged ETF. This is the leveraged ETF, the 3-time ETF on XRT, right? Well, which one looks a little bit more dynamic? Retail. This ETF looks more dynamic than this, doesn't it? So my point is, we caught on to this game with these institution guys. Now, how long is that game going to continue for? I don't know, guys. But it's pretty interesting. End of story, as you point out. So this is the kind of stuff that I go through and I look for. And I know we have a big audience tonight. Thank you all for your time. I hope you got something there. And we had a couple people ask some questions. And Taz says, monthly pivots did a great job on those pullbacks. Thanks, Taz. And yes, this is recorded. Pretty wild. Real results. You know, kind of interesting, guys. I do have something to offer you if you'd like to try this. This is what I call my weekly thoughts and observations. I'll be more than happy to share this with you guys. It's pretty amazing. From a standpoint of starting out, like this is just like last week's information. You could see I send this out last modified. We put this out every single, oops, it went bye-bye. We put this out every single weekend. In fact, I'll just get you this week's. Why not? So this is this week's. When did I do this? I did this Saturday. So I was working Saturday because I didn't want to work Sunday. All right. What we do is we put together a couple things. Last week we're long Valero. entered at 51.92. We got out a half at 54.78. We have a position in Tiffany's, Marathon Petroleum. We did buy Chico's. The son of a gun's got us for approximately a 71-cent loss, or 6%. That was just last week's HCD patterns. This was a little thing on PayPal. We have a couple little option positions that we've just recently put on. We've been in a TLT 36. We did wide spreads with time. Just entered into this little October 7-wide spider put. We have a long-term leap on Morgan Stanley. Those are just things that we put about. We also include our current stock positions. This is just this week. Information that we put together. You guys might be familiar or interested in this. We have in the spiders a quarterly resistance at 219.28. We have these are, so I like to put down what are the pivot supports, and you got to forget the support. I mean, the first one's going to be the pivot point. So this is the potential range for the rest of the month that we think that the market could stay contained in. In order to get to this little level here in spiders, we got to get through the quarterly pivot resistance. So we give that information out. For this week, we had a couple interesting plays. This week, we came out with the recommendation to add in the energy complex with Hess. And then this is an interesting one in the financial region, BOI Holdings, BOFI. It did not get filled, by the way. And then some actually interesting ones, some low closed doji bearish. So green for buy or green for good and red for sell. I'm pretty sure most of you can understand that, right? That's to me kind of interesting that every week that I can come in and say, gee, what would the entry be on the product? Where's my stop loss? What's my first profit target? And what's my holding date? Why is that information? Well, I don't know if a guy wants to trade stock, but you got an entry of stock. If you want to do a stock replacement option strategy and go ITM with an October holding date, you know what your expiration is, so you know you want to probably go with that much time on the horizon, because October holding date, you can't do a September option, you're going to do October. And what does that leave you with, right? Like over 60 days, so you kind of probably want a little bit near a 50 delta, right? Wouldn't that be right? Around 45 to 50 delta, something like that for a long directional option, if you're going to go directional option and if that product is optionable. So we do put out a lot, we call them as we see them. We also go through what are a lot of different technical points of interest are in the market. One thing that we like to look at is breadth. What's the McClellan oscillator at? What's it like on a daily and a weekly basis? So we give out a lot of information for our weekly. It's $49 a month. In fact, tonight we just sent out a little email alert about a trade in XLV. We've started to do this earlier this year. I've been doing weekly thoughts and observation for our own trade room, but it was never an advisory service. And we're kind of launching it because people were more interested in a testifiable track record. We had a stock advisory service since 2010 that, I mean, every year we blew by the market. I mean, phenomenally. So the stock picks that we've made have done very well. I think just different issues. By the way, you'll like this. Recent, I just put this in a very short format tonight, just in case people were asking. These are the long stock picks. You may look at some of these and go, yeah, some of these, I remember some of these names. In the last few weeks, these have been some of the areas of concentration that we've been in, right? And as I gave you American Eagle Outfitters and A&F, and this last week, Apple, Chico's, Valero, Tiffany's, and Marathon Petroleum. So every week we come out with a list. As you know, these are notable buy lists, and so it sure as heck beats. I mean, it's kind of funny. Notice that in the beginning of July, there's more buys, and as we are getting into August, there's less buys. They're starting to the herd is starting to get culled. If you notice that, I find that not to be interesting, and it's not a coincidence. It's a strong coincidence that the buying is starting to, the buy opportunities are starting to dry up a little bit, just by the very nature of the lists getting shorter and shorter as the weeks go by. Again, this is $49 a month. If you're interested, give it a whirl. It's $49 a month. It literally comes out to, what is that, $1.50 a day, $1.50 a day to get email alerts, my trade results, as well as a weekly report sent to your inbox every week. So if you want to go to the website, it's personsplanet.com/report. You can also call us, and at the office, our contact number is 561-655-1881. It's a great offer, $49 for a fabulous, this is more, I wouldn't say institutional grade, but this is exactly the kind of research and work institutions do look at. And as far as my little buy setups that we give as well as sell, I think from a timing perspective, using my indicators, this is going to be a very helpful tool as we navigate the markets for the rest of the year and beyond. So, I would, I'm not a guy that's going to twist your arm. You guys are grown-ups. Do what you want. And I will tell you right now, you won't be sorry with this type of product. So, it's always best to take a whirl, try it for 1 month. There's also yearly subscriptions. I would tell you, try it for 1 month and see if it fits your personality, really. I mean, you're not going to go wrong whether you like buying the stock or you want to buy the option, 10 to 1 or the other for me. But some people can't trade stock because of the capital requirements. They have smaller accounts. And sometimes, some of the stock picks, I'm not going to exaggerate, some of the stock picks, the options just aren't optionable. They're just too thin, right? So I generally like to look at stocks that are S&P 500 or Russell 2000 at the very least. All of them are usually contained in the New York Stock Exchange Composite Index. And I'll just tell you the list of things that I go through on a weekly basis between seasonality, volume trends, multiple time frames. And this is the list that I put out that I feel is highly qualified for investors, especially with my name on it. So if you are interested, the link will be pushed into the room, and you can find that at Persons Planet, www.persons, I'll type it in myself, planet.com, and it's /REPORT. There it is. So, everybody, I hope you found interest in tonight. At least, take a look-see at how buy signals, and if you have Thinkorswim, many of you are Thinkorswim clients, and you run a scan on Thinkorswim using the PPS indicator. What's really amazing is that you can run a scan on, it's just different layout of the buy and the sells. And I actually, just another little further tidbit for you guys. When I run the scan, I like to say, okay, how many actual buy and sell signals did we generate today? Really bullish, I expect more buy signals, right? If the market's starting to turn from bullish to bearish, if it's starting to turn, let me repeat what I just said. If the market is in a torrid uptrend and it's starting to turn, then I'm going to probably start to see more sell signals populate. And then to wrap that up, let's take a look at something, as I mentioned, about the XLV. And we're going to just go on down here till we get to the sector. And we're going to get right on into healthcare today, okay? So let's take a look at biotech. Today, alone, Acadia Pharmaceuticals generated a brand new sell signal. The XBI, incidentally, that's the ETF on biotech, generated a daily sell signal. Celgene generated a daily sell signal. The IBB generated itself, the ETF on biotech, generated a daily sell signal. Regeneron is already in a sell signal. AbbVie generated a fresh new daily sell signal. So we've got not only down on the day, but they're starting to generate sell signals. So the next question would be, what does the volume look like? And when I look at a stock that goes up and the volume shows bearish divergence, I kind of think that maybe we want to pay attention to see if there's more and more stocks populating more sell signals. And then when it goes from a daily column and then we start to generate weekly sell signals, that's when you'll probably expect a bigger decline in the market, right? And that's generally what we've been seeing in this form of market analysis that we created on the Tradestation platform. So these Patrick says, do you have to use Tradestation or can you use TC? This is Tradestation. We created this in Trade, have it in TC 2000. I just have this particular package in Tradestation. All right, but if you have an account with Thinkorswim, you can simply run the PPS scans, which we have videos to teach people how to utilize that. Another form of what I just talked about is called just a breathing entity, living, breathing breadth indicator. How many stocks generated not a negative day, but actually created an algorithmic change to the point where it generated an arrow, a sell signal, right? I mean, if we've got stuff that's generating sell signals and weighs in on the Qs, and if the Qs have this huge move to the upside, and the advanced decline that's on the NASDAQ 100 is not moving up with price, that might be something that we could see a little bit of a pullback in that is going to affect the NASDAQ 100, because the NASDAQ 100 is a lot of biotech, right, guys? So there it is. Everyone, have a great evening. We went a little overtime. I apologize. If you are interested, I would firmly take advantage of this special offer for $49 a month. It's a relatively new product, a new service. There's nothing that I know of on the market like this, because it's got my name on it and it's got my analytical tools, right? This is one of the things that I think is going to help give you, if you can understand advanced decline, if you can understand weighting and sector, and if you're into looking for the right stocks in the right sectors, then this is a great report. So every week, week in, week out, testifiable factual technical analysis techniques with trade recommendations. With that said, I thank you for your time, and I hope tonight at least gave you a better insight in some of the market techniques that we use in trading. Thank you, everybody. Have a great evening.